We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the Cash Flow Pro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hey there, and welcome to today's episode of Cash Flow Pro, your daily podcast and YouTube channel investment real estate show. I'm here today with David Toupin, CEO of Real Estate Lab. David, how are you today, sir?
Man, I am doing wonderful. Another day in paradise, as we said.
That's exactly right. Every day is a day in paradise when we're investing in real estate, when we're syndicating real estate, when we're raising capital. Whatever you're doing today is a great day. So, David, we want to hear a little bit. So you and I were talking pre-show about a couple of different things, the software stuff that you all have going on and some real estate syndication, capital raising stuff that you have going on and maybe with some partners. So I want to hear a little backstory. We want to hear a little bit about maybe where you were 5 or 10 years ago and what kind of event or what happened that kind of set your sights in the direction of saying, hey, I want to pursue at least real estate in a couple of different avenues there.
Yeah, so I've always been an entrepreneur. I started my first business when I was like 13, 14, landscaping. Right. So I was like mowing everyone's lawn in my neighborhood type of deal, doing a bunch of landscaping stuff. And that was kind of a good way to channel my energy there into being an entrepreneur. And then coming into college, I studied finance, and I did a little bit of I spent probably about 9 months doing internships in like investment banking, consulting, did a little Big Four gig, and then some boutique banking firm.
Sure.
And I stumbled upon real estate. I always had an interest in it, and I knew I wanted to kind of get into some sort of my own business as opposed to going the corporate route. Another intern I was working with introduced me to podcasts at the time, and this is like early 2016. I think January 2016.
Yeah.
And so podcasts, they're around, but they weren't like what they are today. Yeah. And I found Bigger Pockets. I started listening to it right away, and I was like, man, the real estate sounds awesome. Like anyone can do this.
Yep.
And so I actually went and I started like wholesaling a little bit with really in my mind, the goal was I want to do bigger stuff in apartments. That's what I wanted to do is apartments. I heard like Jake and Gino back then, like other people like that. And I knew I wanted to do apartments. So I don't know, I wholesaled for like 4 to 5 months, did a couple deals. And then I was like, screw this. I need to just go straight into apartments because that's what I really want to be doing. And just started. I kind of used my skills that I'd learned through the banking in Excel and financials, stuff like that, to start looking at deals from brokers. And within a couple months, I think it was like, it was like end of November 2016, I locked up two 12 units within like the same week. I made offers, didn't know they'd both get accepted, got them both accepted. And it was funny because I had zero money raised beforehand. I had obviously no money of my own. I was 20 years old paying for my meal plan at college still, right? So now it was like, oh shit, I got a deal. Now I got to find the money.
That's right.
That's how I got started.
Get out and figure out how to make it happen. Well, obviously you did.
Yep. Yes, it was a heck of an experience trying to raise money as basically a kid with no experience and no track record.
Sure.
I had to
figure out. Lean into that a little bit and tell us, because there's a lot of listeners out there who they're maybe not 20 years old, but they're like, hey, I want to do this, but I can't really figure out what to do. So what was your initial step there?
Yeah, well, obviously you got to start with like the why. Like, why do I want to do this? I want to build wealth, and I'm going to do whatever it takes to get there. So, then it's like the what, right? Now I got to find the deal, and it's just a puzzle. I don't know, it just seemed to click for me. It's just a puzzle. It's like I got to find a good property that's going to make money, and I'm going to have a good business plan. And then I've got to figure out who's the bank that's going to give me most of the money, and who are the investors that are going to give me the rest of the money. And the toughest part was finding the investors because I didn't have a list. I didn't have this, it wasn't family money, nothing like that. So
Mhm.
I had to literally knock on doors. I was going to RIAs, meetups, all that. I was talking to anyone I could and just putting this deal in front of them saying like, hey, look, you got 25 grand, 50 grand, whatever it is, invest in this project. I'll make you money. Here's the
Sure.
projected returns. And it was it was a grind to get even 5 or 6 people to put up 25 grand or 50 grand.
How much did you end up raising altogether?
On those 2 deals, it was close to 300,000 I needed to raise. It took me like 3 or 4 months to get the 600 grand raise.
Wow. Well, but
Yeah.
I mean, everybody has to start somewhere, and
Yep.
that's the worst part about being in the position of needing to start. It's like, okay, I don't want to waste all my time doing this, this, and this, but then you end up
Hmm.
wasting that same amount of time studying this, this, and this.
Correct. You
So
can
you
only
try
do
to
so
get,
many courses before it's like, man, you just got to find a
you just got to
deal
do it.
and
You
put
just
it in
got
front
to
of
now.
people.
Where did you? So did you? Now we hear so much about meetups, and we hear so much about those kinds of small gatherings and things like that. But did you just go to like meetup.com or something like that, and just
Exactly.
start searching for them?
Yep, meetup.com. I went to all the local RIAs, like all that kind of stuff is what I
Like
was getting
Ria,
into.
so explain that to
Like
the
a
listener.
real estate investor association.
Okay,
Yeah,
okay,
so all those kind of meetings, and those are mostly like residential single family type
yeah,
gigs,
yeah, yeah, yeah.
so
Now,
but
did you
I
have a
was kind
good?
of getting
What did your pitch deck look like? Or I guess they probably called it PowerPoint slide back then. I don't know what year it actually transformed into pitch deck, but anyhow,
it
what did
wasn't
you?
even it was not even that special. It was terrible, right? Just one of my big mistakes at first was I put like some photos, my Excel underwriting model. I had like a one pager Word document with like my description of the project, and I
Hmm.
threw it all in a Dropbox, and then I sent the link off to investors. And what I figured out was nobody looked at it.
Yep.
Nobody wanted to comb through multiple documents. Nobody wanted to go through a spreadsheet that they don't know how to read
Yep.
and figure out what are the returns going to be. So I spent like 30, 45 days doing that before I'm like, wow, I've talked to like 40 people and nobody wants to invest or is taking the time to look through this.
Yep.
Maybe I need to make it look a little prettier. So then
Yep.
I got to the OM, putting the PowerPoint together or a pitch deck or whatever,
Yep.
and then people
Nice
started actually
colors,
asking
good pictures.
questions. Exactly.
Again, a plan, a laid out plan of how this
Yep.
is going to take place, and what. I guess obviously that deal has gone full cycle. Is that right?
Yeah, I sold those about 4 years ago. Hit
Tell us what the.
projections.
Tell us what was the return on it.
So we were projecting like a 15 IRR over a 5 year hold. I ended up selling them after like 17, 18 months and hit the sale price I was projecting. So I think we got close to like a 20 IRR on both of those deals. So
Good Lord.
it wasn't like double your money though in a short period of time, but it was they're good returns.
Yeah, but I mean, just anything solid like that to get you a small little track record going, and then kind of pick up and move on from there. I mean,
Exactly.
that's what a lot of people don't understand about just marketing in general is just. I've always heard the saying, "Episode one is better than episode none," and
Yeah.
it's the same deal. Whether you're never going to know if you can do it if you don't even try. And the
Agreed.
fact that you would just look for meetups and get out and present and did you run into any resistance from the people that were like putting the meetups on, as far as like them saying, no, or we really don't want you coming? Or I mean, was there any type of resistance? I mean, was anybody did anybody insulate their group of investors from you at all?
No, I wasn't going to like multifamily specific groups. I was just going to any type of real estate meetup that I could find, and
Mhm.
I was just networking with people and asking like, "Hey, do
Well,
you have extra money to invest?"
and
Even if it's a house
for
flipper or whoever.
a lot of those people that are meeting after hours are pretty driven people anyway.
Exactly.
If they're meeting after hours, they're driven but they're more likely to be driven. Let's say that than the
Agreed.
person that's at home watching whatever
Correct.
the evening sitcoms. Now, so let's kind of transform this discussion just a little bit into the software that we discussed, and then we're going to kind of hopefully take the pieces of what you have multifamily real estate wise going on, and your software stuff that you've got going on, and maybe kind of move both of those forward and see how they kind of come together.
Yeah, so back when I first started buying multifamily, right, from what I was telling you, I built out like a little spreadsheet. It used to be a one pager, and just something simple to underwrite deals. And over time, it just evolved. The more deals, I looked at hundreds, maybe even thousands of deals I was underwriting
Yeah.
in order to make offers. And so the spreadsheet just evolved and evolved, and I think it was in like 2019 people started really asking me, like, hey, where'd you get the spreadsheet? And I'm like, oh, I made it, and it
Yeah.
works and it does this. And they're like, oh, cool. Can I buy it from you? I'm like, well, I never really thought about that, but sure. And so I put it on my website for like $250. And over the course of like a year and a half, I sold over $100,000 of a spreadsheet. And I was like, man, I'm making more income from this than the cash flow on my apartments.
Wow. Yeah,
But
no doubt, man. That's awesome.
yeah. So, but what was interesting is really at the end of the day, I was like, man, there's a demand for this product. There's a demand for people to have something that, one, works and is
Hmm.
easy to use.
Yep.
Two, they can trust it. There's a lot of spreadsheets that people buy out there that have faulty equations
Yep.
and mistakes in them, and you're making multi-million-dollar decisions based on a spreadsheet. You need to know it works and is accurate,
Yep.
and has functionality that you want. And then next, right, there's a lot that goes into the acquisition side of this business, right? From managing hundreds of documents associated with every property we buy, from the surveys to the title work to the financing documents to the investor like all this stuff
Yep.
that goes into acquisitions, the due diligence process, the underwriting. Um, and so I wanted to build out an actual software platform that could assist with this, right?
Yep.
And that could help manage the whole acquisition side. There's a ton of property management softwares, there's a ton of investor management softwares. This
Yeah.
is this is acquisitions facing, so it's totally separate from those.
Yep.
And so I started Real Estate Lab, and it just started as kind of some ideas of, hey, how do I bring this analyzer to an online format, to now where we're at today, full-fledged acquisitions platform, realestatelab.com. And, it's all cloud-based. You can underwrite deals, manage your pipeline, send LOIs, all online. And we've got a lot more stuff coming, later this year. So it's
Sure.
been a cool process to see.
Now, is it kind of the thing, you had mentioned there a little bit ago about some of the spreadsheets and stuff that are available online, and then you run into some broken links or broken,
Sure.
not links, but broken formulas
Equations. Yeah.
and equations and such in the spreadsheets. And so is yours still spreadsheet based, or
Hmm.
is it completely so once you become a member of Real Estate Labs, I assume it's some type of a monthly type deal,
Exactly.
and then you get access and you can underwrite and send LOIs based on these underwritings. Um, and then the analysis that takes place, I mean, is it across the board all the way, like all the way down to every percentage that we all look at?
Yep. Yeah. So it's still Excel based. So the
Okay.
platform is integrated with Google Sheets.
Okay.
And what's cool is the flow, right? You add a property to the system. It's like a CRM. You add a property. You upload the rent roll in T12. As long as it's in Excel, our platform will read the rent roll. It'll read the
Yeah.
T12. It pulls out the unit mix. It'll pull out the key numbers from the T12. It'll put all that data right into the analyzer for you, so that a ton of the fields are already pre-populated. And then you
Yeah.
open up the analyzer. It's got all that stuff in there, the unit mix. All you got to do is pick your rents, your operating expenses, and then set your purchase price, and then it's kind of done. So our goal is that when you open up the analysis, we can pre-populate as much of that data as possible. So something coming in the next probably 6 months is automated operating expense assumptions. So when you open up the analyzer, you can choose certain data sets, and we'll pre-populate your operating expenses for you based on the type of deal, the market you're in, and all that stuff. So you don't have to go guessing, what are my contract services, what are my repairs and maintenance
Yeah.
or insurance assumptions. It's going to pre-populate all that for you based on market data that we have, and tons of other stuff. So
Yeah. Well, that's awesome, man. I mean, and it's such a big piece of this business, and it's usually it's the most unsexy part of the business. If you
yeah,
know, I mean, it's just
totally
it's like
unsexy.
everybody wants to see fresh, new, clean, good sharp pictures of new remodeled units and new pools that they put in and new this and new that and new fitness centers. But then all of a sudden it's like, oh, wait a minute. I got to
Yeah.
make sure this damn thing actually makes money. And so it's
Correct.
hard to, so yeah, so to take something that's probably quite honestly the most important part of this process and make it at least where it's not quite as cumbersome
Correct.
and then of course if your monthly fee is considerably less, I'm assuming, than probably hiring an outside underwriting, either an outside underwriting firm or an outside
Oh yeah.
underwriter on
It's
your team.
$99 a month.
Yeah, I
It's not
mean,
too expensive.
$1,200 a year. That's pretty much gonna. I mean, I don't know anybody that would work for $1,200 a year, so you're already in the game right there. So
Exactly.
so now what came first, this chicken or the egg, the investing, or did you use your initial Excel program to underwrite your first deal, or did you just
Mhm.
like go wing the first deal?
No, I'd used Excel underwriting. I mean, it was in a much simpler form
Sure.
back in like 2016, 2017, and it's evolved over the years into what it is today, which is now integrated with the software.
Yeah.
So, yeah, I'd been investing for about 4 years before I started the software company.
Awesome, awesome. Now
Yeah.
tell us about you were talking about your most recent deal and what you all had going on there. Tell us a little bit about that.
Yeah, so I've done a lot of apartments over the years, and I moved down to Austin about 3 years ago, Austin, Texas.
Everybody
And
lives in Austin. Good
everybody
Lord.
lives in Austin, man. They all are moving down now. It's a wild. The amount of growth here is absolutely insane.
Yeah.
And so I'm doing some different projects here. I've got a condo conversion, the 16 unit apartment community. We've converted into condos. We're selling the condos off. I'm building 50 apartments out kind of where I live, North Austin. But the biggest thing I've got going on right now is a $10 million self storage fund that
Oh
we actually
man.
just launched like this week.
Yeah.
And the plan is to go out and buy, somewhere around eight to 10 facilities with the fund, mom and pop stuff surrounding Austin, kind of, in the little tertiary markets that Austin is growing into, right? Austin is like absorbing all these little towns around it with the
Yeah.
amount of growth
Yeah.
that we've got.
Yep.
So, stuff that used to be a 30-minute drive from Austin is now like connected, right? It's now
Yep.
in the metro area. And so we're targeting those types of markets, buying existing storage facilities with room to add additional storage. And so, something with like 5, 6 acres, it's only got 20,000 square feet of storage on it. We're going to go in and add another 60, 70,000 square feet of storage, lease it up,
Wow.
and then do, 7, 8 of these. And then we're going to sell the portfolio as a whole to a larger institutional investor, somebody that wants a big storage presence in Austin.
Shoot, yeah, man, that's great.
Yeah.
And you said you all just launched it. So
Mm-hmm.
is this your first run at a fund type setup?
It is. Yeah, I've done syndications and JVs, but this is the first like fund where we're going to go buy multiple deals within the fund.
Awesome, man.
Yep.
That's
So it's
great.
interesting. New
And so
experience.
it's one of those deals where it's just like you're constantly stepping into new stuff and you're constantly trying to
Correct.
figure out ways to put this whole ball of wax together, I guess, if you will. And it looks
Correct.
like you're doing it, man. I mean, that's great. Now, so you mentioned everybody's moving to Austin, and you had mentioned some individual deals that you've got down there. Now you said you're building 50 units. Is that right?
hmm Yeah, I've got a 50 unit ground up development. Bought the land about 2 years ago, and we're wrapping up development in the next hopefully 3 or 4 months. COVID kind of slowed us down by a couple of months,
Sure.
but yeah, we're
Yeah.
wrapping up. And it's funny because like when we put that deal together, it's like 46 2 bedrooms and 4 1 bedrooms, and for the twos we projected like 1,200 on the rents originally, and
Uh-huh.
now just a year and a half later.
Oh
We're
my
probably going to be renting
goodness.
those for like 1,600, 1,650.
Wow. Did your
So
what percentage did your costs go up from initial to
costs
finish?
have gone up too, though, because with COVID, we bought lumber like right during COVID. So we're probably over about 10 to 15% on the costs.
Yeah.
But our rents have gone up. So
They've
I think
gone
our
up
valuation is up
36%.
about 40% on
Yeah.
the end valuation. So,
Wow, man, isn't
yeah.
it something? And you sit and watch this economy, and you sit and watch this thing grow. Is there a lot of new construction, like new build stuff being sold down there? I mean, obviously it is. You said you're talking
Oh,
about
yeah.
because when we used to drive through those areas when I was a kid, you'd come to like a little town every 25 or 30
Yeah.
miles, the little towns you're talking about, and all they had was a small elevator and maybe a water tower and,
Yep.
maybe 50 or 60 little houses, something like
Yep.
that. So all of those are kind of being swallowed up by this new
Oh yeah.
construction that's just taking basically desert ground and putting footers in it and building houses.
Exactly. Yeah, they're all the vacant land is being swallowed up. Every time like the city pushes out that next ring of vacant land is swallowed up houses, shopping centers, strip malls, grocery stores.
Yeah.
Hi, this is Casey Brown, host of the Cash Flow Pro podcast and YouTube channel. Have you been thinking about investing in real estate but just don't know where to begin? I'd like to help by inviting you to check out our website at www.3000capital.com. There you will find an array of material that will help you learn all about real estate syndication. And while you're there, be sure to check out our free video series download titled 5 Must-Know Keys to Success in Passive Real Estate Investing. I'd also like to personally thank you for making Cash Flow Pro part of your day. Now, back to the show.
Gas
Now,
stations, everything.
where were you originally from?
I'm from Detroit, Michigan.
Okay, now where was the 212 unit buildings? Were they in Detroit?
They were, yeah, it was outside of Detroit in the suburbs, about 20 minutes outside of Detroit.
And
So
what year?
southeast Michigan. They were what year? They
Yeah.
were built in I
No, no.
think the
What year was
60s.
this that you
Oh,
that you did that?
that was 2016 when I bought those.
Wow,
End
man,
of
that
2016.
was a gut move to, especially in that area. I mean, it was hit so hard. Like,
It
I don't
was.
think people I talk to people all the time on my show here where we talk about the military market that I'm local to,
And which
and
one is that?
Fort Campbell
Okay.
and Fort Campbell, Kentucky. And as a matter of fact, when you talk about vacancies, and a lot of people don't realize that an active duty soldier who is deployed cannot be foreclosed on.
Oh wow.
So as long as he's not on American soil, he cannot be foreclosed on. As soon as he steps back on American soil, it's game over. But
Wow.
when he's not on American soil, he cannot be foreclosed on. So what we had was this market of 3 foot grass, and as far as you could see, the city was fining everybody for having to go through and mow these yards, and so
Wow.
on and so on and so on. But
That's
all of
scary.
that being said, I don't think that holds a candle to what was going on up there. Like, now, again, the news media likes to share out the worst
Yeah.
of the worst so that they can get a reaction. It's similar to the people on our favorite social media platforms, but at the same time, that was a pretty gutsy move to go in there. It seems like to me, at least from the outside looking in, that that was a pretty gutsy move to go in and try to make an investment in such an area as that.
Yeah, well, so I say Detroit. I grew up in the suburbs, which is a little
Okay.
bit different.
Okay.
They're more like Class A, B areas. There's, definitely different than when you're in the city of Detroit. But Detroit as a whole metro area got absolutely crushed in 08,
Oh
09.
yeah.
I mean, I had just a crazy amount of friends whose parents got laid off, like the automotive industry, the GM bankruptcy, right? All, we're so automotive heavy, and that
Yeah.
industry just got absolutely crushed. And then we had, a mayor that was like laundering funds, like all this
Yeah.
terrible, like corrupt stuff that happened in Detroit. And so that city was at the absolute lowest of the low right after the crash, and it was bad. So it's like almost nowhere you can go but up from there.
Yeah.
And so it has actually come a long way since then, which is cool. The city of Detroit, but the
Yeah.
suburbs have always been fairly stable. I would say, they're pretty typical. Like there's a lot of good C markets, B's, and A areas
Probably
that
some
are
good
pretty.
influence of other type of, maybe not necessarily heavy auto
Yeah,
industry.
there's different influences exactly, and just there's always been a lot of money out in outside of Detroit. That's you don't even think that, but there always has been a good amount of wealth out there. So it stays fairly strong. A little bit of diversity of businesses, but I like investing in Austin way more because just
Sure.
there's no growth in Michigan overall, right? A little
That's
bit
right.
right now because everything's growing, but
Yeah.
long term, a place like Texas or Florida or Phoenix, there's just tons of good markets that you can go to.
I
You
was
know,
just sitting here thinking about Phoenix. We were there a couple months ago, and and I was literally like, we were walking in old Scottsdale, which is
mm,
kind of off the beat. I don't know. Anyway, it's a beautiful little place. And, and honestly, I was standing there. I was just standing like in the middle of the desert, and I was looking around, and I was like, this is like two guys were hitchhiking one day down some old dirt, dusty roads, waiting on a buggy to come by and pick them up, and they were like, hell, let's just start a city right here in the middle of the desert, and
Wow.
it's just as flat as far as you can see. And anyway, I mean, but man, talk about just something that's almost like it's almost like tropical conditions where you're just your coldest days are maybe 60s, and
Yeah.
anyway, we were there in October, so I haven't been there
It's a
when
beautiful city too.
it's
Yeah, Scottsdale in
beautiful. I mean,
Arizona. It's really
absolutely beautiful.
clean, a
But
lot of development.
I didn't understand what the initial draw was to make a city right there, and I'm sure
Hmm.
it's in a book somewhere that you could probably Google it and find out. But
Yeah.
Austin seems a little bit. I think there's some water in Austin. I think
Yeah,
probably
it's a little
that
different
made
topography.
the
It's
difference
extremely
there. But
hilly, which is cool. So you get some beautiful views. There's a lot of water, tons of lakes around Central Texas here. Downtown's beautiful, and no state income tax, which is
yeah,
nice. And
yeah,
it is crazy, like the amount. There is a ton of movement here from everywhere, but
yep,
California especially.
yep.
And then businesses are investing heavily here, which, as we all know, the biggest economic growth indicator is jobs, right?
Oh
Because
yeah,
jobs and businesses moving to a certain city or area, obviously that brings the employees, right? They want to come down, whether or not it's a remote business type of world today or not. People are moving here because of that, and then people are moving. Snowbirds, people that don't want to live in the cold anymore. They're coming down, and they're like, I
yep.
can work from anywhere, so I might as well work from somewhere like Austin. And it is unbelievable. I just 3 years ago, a house that you could buy for 500 or 600 grand is now worth
That's
$1.5 million.
just
It's
crazy.
weird, dude. It's
I
weird.
mean, triple. Talk about return. I mean, and it's like it had all the indicators of being there, and
Yeah.
a lot of people were just like, 'cause, we've invested and bought and done some things around, and a lot of people just were like, oh, it's going to crash, it's going to crash, it's going to crash, and then I mean, here we
Yeah.
are 5 years later, and this thing is still like a,
Yeah.
it's
And it's
like
still
every,
not.
it's
Yeah.
like every time a politician speaks, it just pours more rocket fuel on this thing, and then it just keeps on going, and
It's
and then
unbelievable.
of course you've got a lot of outside stuff that does make typical investors a little bit nervous, but I've always said from the very beginning of my real estate career that real estate is one of those things. It always has a value. That value may not be what you want,
It's never going to go to zero.
but it does not go to zero.
Correct.
And that's, with that being said, again, it could definitely go down, and you could definitely lose money. You could definitely buy now and be underwater in 5 years. We've seen it.
Hmm.
Everybody that was around during 08, 09, 2010 and in through there has seen that.
Correct.
So we know it has that potential. But the fact of the matter is, and I've said this many times on this show, and I hope people listen. If you don't listen to me, if you haven't listened to me the last 10 times I've said it, listen to me now. People talk about, oh, I bought a house in '05. Okay, well, then in '08, '09, everybody was walking around with tears running out of their eyes. They
Yeah.
couldn't, nobody could do anything. And now look, in 2022, would you like to have a property right now today at the price that it was in 2006? I mean, come on. We're mountains above where we were even then, but
Correct.
nobody wants to ride the dips, and you have to buy these things for cash flow.
Correct.
And when you
Well, I
look at these
always.
things and you buy them for cash
Yeah.
flow, then
Correct.
you can afford. It
To
may not
ride.
have the return through that 2 or 3 year slump, but you know what? It's going to have appreciative return on top of the cash flow.
Correct. And the way to do that is, like, if you think of the curve or the line graph of where pricing is in the current market, you just got to take wherever we're at, and you got to always be buying 10, 15, 20% below that, right? So
That's right.
yes, we're at the top right now, or we feel like we're at a peak. I really do feel like we're peaked at this moment with the
Yeah.
rising interest rates. But there's still deals to be bought 10, 20, 30% below market value. You've just got to go and find it.
Just
And
buy
so,
in. Yeah,
correct.
just go, and everybody wants to find a deal in their first 2 or 3 LOIs or their first 2 or 3
No,
underwritings
it's not going to happen.
that they take on. No, you got people out there underwriting 50, 60, 100 properties and not getting any of them
Correct.
and having to back up and punt.
Yep.
So, man, you've got some really good advice there, and I hope that anybody that's out there and that's part of what we do as syndicators is we're out there finding the deals, making it a truly passive investment
Yep.
for the investor. Am I right?
Correct. 100%.
And so
take the risk out of it, all that.
Yeah, take the risk and then take the geographical risk out. So, well, I don't want to. Austin is awful heavy. It's awful high. All right, well, we've got an operator in Austin. We've got an operator in Kansas City. We've got an operator in wherever, Pensacola, Florida. And, you geographically diversify as well as you diversify across asset classes like what you're talking about. Some self-storage, some multifamily, and like you said, essentially the land you bought for the 50 units that y'all are building, that was a different type of investment,
Correct.
essentially, until the day it started taking on structure.
Correct.
So anyway, all that being said, David, I want you to take a minute here, and so we've got listeners of basically all types, and so there may be some people out there that want to possibly look at your underwriting software, or at least maybe get on a call or something and discuss further what you have to offer as far as that goes. And then, of course, your fund that you've got set up could definitely be something that somebody wants to get in touch with you about and possibly invest in. So why don't you take just a second and tell the listeners how they can get in touch with you so that you can help them out however they need it.
Yeah. So in terms of on the investing side of the business, you can go to toupinholdings.com, and my last name is spelled Toupin, toupinholdings.com. And then in terms of the software, if you have interest, you can go and check it out, do a free trial or sign up for it at realestatelab.com, realestatelab.com.
Awesome, man. And that's Toupin Holdings?
Toupinholdings.com, yep.
And that's plural, Toupin Holdings. My listeners know I'm big about adding those S's or not adding the S's. So
gotta add that.
ToupinHoldings.com or realestatelab.com.
Correct.
Go check David out. And David, I can't thank you enough for the time you spent with us today. I know that carving out just a little bit of time in these deals can mean the world to somebody, and hopefully we're able to hand that to them today. So I do appreciate it, and I want to say thanks again for your time.
I appreciate you too, man. Likewise. Thanks so much.
Absolutely. 100%. Thank you. See ya.
Cashflow Pro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.